Ladies and gentlemen, welcome to another edition of In the Pit with your host, Lobo Tigre. Our victim of the day is Fletcher Morgan. He's CEO of a company called TDG Gold. TDG, reminiscent of Toodoggone, which is where they're working up there in BC. Now, I have history in the Toodoggone region. It didn't all go well, but before we start out on a negative foot, Fletcher, why don't you give us an overview of what you're doing? Then, of course, I've got questions.
Okay, well, thanks very much for your time today. I'm named Fletcher Morgan. I'm the CEO and director of TDG Gold Corp. I'm also an owner. TDG is a major mineral claim holder in the historical Toodoggone production corridor of north central BC. We've over 23,000 hectares of brownfield and greenfield exploration opportunities under direct ownership or earning agreement. Our flagship projects are the former producing high-grade gold, silver, Shasta, Baker, and Metz mines, which are all road accessible. Produced intermittently between 1981 to 2012, so pretty recent. And we have over 65,000 meters of historical drilling, to which in 2021, we added just over 8,000 meters of diamond core oriented core drilling at our Shasta project. We currently have just over 96 million shares issued and outstanding, having just completed a financing recently of $9.75 million, including flow-through dollars.
Excellent. Well, that was an admirably pithy overview. Okay, so I probably shouldn't have started this with it was unkind, but let's just go there. So back in the day, there was a company called Christopher James Gold. It had a Toodoggone play. I don't remember if the property was called or just the zone was called. It was a known area of gold mineralization called Albert's Hump, and they drilled the heck out of it, and they had some high-grade excitement at first, but they just couldn't get any size out of it. And you know how sometimes companies change names, projects change names. You're not drilling Albert's Hump, are you?
We are not. And I obviously I don't remember when that company was around or operating. Certainly probably predates my involvement in the junior mining sector, which dates back now to around 2010. Okay, so the connection between our company and the Toodoggone is that our chair, a gentleman by the name of Andrew French, who's a geologist, wrote his master's thesis on the Toodoggone district in the 1980s, with a particular emphasis on Shasta and Baker. Has always had a hankering to get in there and do work. He's now actually the lead analyst for the Conway Gold 2000 family of funds based out of Zurich. So that's the connection between us and the Toodoggone. And when we learned back in 2019 that Talisker Resources, led by Terry Harbert and his team, were looking for a strategic opportunity for someone to come in to acquire their Toodoggone assets, because they were going to focus on Braylorn, and to acquire their Toodoggone assets, but they really didn't want to just sell it for cash. They wanted a team that was going to come in and advance them and do justice to the opportunities. Fortunately, Terry and Andrew knew each other well enough to start a dialogue. Fast forward a year and a half or so with a bit of COVID in there, and in December 2020, we were lucky enough to acquire the assets in an all-share deal with Talisker and set about then exploring in 2021.
Excellent. Okay. Well, just one more point before I drop it. One of the things that twigged me, I understand that BC is a big place. The Toodoggone region has a lot going on there. But one of the projects is called Baker, and Christopher James Gold was run by a guy named Max Baker. And that's really what set the alarm bells ringing in my head. So pure coincidence. As far
I think it is, because I think actually the names of all of the main projects certainly within our area, not just ourselves, but our neighbors as well, are named after volcanoes.
Ah, okay. All right, so this actually is a good segue into something else, and I'm glad to hear about your chair and his geological background. This is actually pre-answering something I was going, because I'm looking over the management sheet, and you're a financial guy, and so is everybody else, and the C-suite doesn't even seem to include a geologist. Your project geologist is the most senior geologist I could see on the management team. So I was wondering who's bringing the geological expertise to the play. It's not you, is it?
It wouldn't be me, that's true. However, if you look at our board, you've got no fewer than 4 geologists on the board. Okay, so it's not just Andrew French and Terry Harbert, who's a structural geologist with a PhD, but Matt Philgate, his colleague from Talisker, and Evandro Nakano, who is a former B2 Gold geologist. And then switching over to the management team, Steve Kramer is our senior geo and BC program lead. We also have recently been joined by Chris Dale. Some of your audience may be familiar with his work with Midas Gold that went on to become Perpetua Resources. Chris has a fabulous background of over 30 years, and his speciality is targeting. Doing that, wrapping his head in a towel, taking all of that data and information that has been, collected over decades, and recompositing it and helping with targeting. And he's been instrumental in changing the outlook on a couple of other projects, and that's what we want him to do for us. Shasta, and I know we're going to get into it, but Shasta, there was a wealth of historical drilling. Not all of it assayed, about 48% of the core was assayed. So we already knew roughly where we wanted to start, but we've set Chris the specific target of answering the question, well, how big could Shasta be? And if you were going to go and drill outside the obvious areas, where would you go and why? I'm into, mineable ounces, and one of my key performance indicators for the year is discovery cost per mineable ounce. Okay, so Shasta is not a vanity project, not for this company. It's all about, can we put on the board mineable ounces that we can advance rapidly through to a production decision? Because there are other features of Shasta, which I know we'll get into, that mean that we are optimistic that this thing could be pushed through to, like I said, a production decision in the midterm.
Okay, so before we move on to the people, from the people to the project, so I did see that press release about Chris, but he's, as I saw, he's consulting geologist. He's not VP for exploration. Correct. Or anything.
No, he's not. No.
So it just looks a little funny on the management, that we have all these different people, and then down at the bottom there's your senior project geo, and that's the most senior position. But okay, if your board is very hands-on, I mean, there are boards and there are boards, right? And if your board is highly technical and very hands-on, then that makes me feel better about what we're talking about here.
They are, but you can expect to see the strengthening on the technical side of the management team over the next 12 months. What people have to remember is that TDG Gold listed December 2020. It was our first drill season last season. We'd already got to grips through the due diligence process with a lot of the recompiling of the historical information, but it was our first operating season last season. So we're still only, 15 to 16 months into this journey. And so this season, having now produced a series of drill results, which, again, I know we're going to get into, but we're very excited by, and I can set in context, now it's time to take that technical team to the next level, and your audience will see that happening.
Okay, well, let's go ahead and talk about Shasta then. And before we get into the results, one of the things, just to understand the setting here, it's a fast producer, but the concept here is sort of like a Cisco or Detour. You're not looking for a little high-grade remnant. You're looking for a big halo deposit around the old high-grade workings. Right, okay, I get it. And it says permitted mine area. What exactly does that mean? Could you start producing tomorrow if you wanted to? Are you permitted for exploration? Or what are you actually permitted for there?
Yeah, okay, so two bits to that. So the first bit, just to talk about revisioning the project, just briefly. We're not inventing something new here, okay? In the 1990s, when they started drilling Shasta in the 70s, it was known that around the high grade, which was typically associated with the structural controls, that there was the potential for this halo style mineralization. So we've not come in there and suddenly said something brand new. And also our neighbors around us in that area have already demonstrated that. Our neighbor Benchmark has undertaken over 100,000 meters in the last year or so and has demonstrated that existence of that halo style mineralization, medium and lower grade around those high grade pods. So that's the first thing. Okay, so we didn't walk in there thinking, wow, we're going to do something special and spectacular here. We walked in knowing that we had a foothold and knowing what we wanted to execute. Then your second question was about the permitted mine area. We're permitted reclamation and closure, but we're also operating in a mining lease. So what the permit enables us to do is to self-certify certain activities without having to apply for additional work permits. It does not permit us for extraction. A mining lease, you are allowed to undertake certain amounts of extraction a year, but we're not small-scale operators. And I'm not sure if your audience can see, but in the background, we do have a mill It is in good shape, and it last operated in 2012 with Shasta ore. So we do have that potential to do some kind of, what would you say, bulk sampling, something like that, if it was useful and helpful to what our ultimate objective is, which is to redesign Shasta as this bulk tonnage open pit opportunity, and obviously therefore the tonnage, et cetera, would change. So we are going to have to go through a re-permitting process, or more accurately a permit upgrading process. But what we would anticipate, given the amount of information that exists on this property, not just in terms of geological and technical, but in terms of environmental as well. Don't forget, with permits comes the requirement to maintain them in compliance. Talisker did a lot of work on this, so we inherited a pretty good situation, but we've got it all into full compliance, and so we're able to build on that wealth of information now, and we would anticipate that that would mean a saving in terms of years, in terms of a permitting process, subject to all the other things that you would expect to go along with it: consultation, working in partnership and allyship with our local communities. All of those things take as long as they need to, but the actual permitting stage, we believe that we're already down the road, but none of that makes any sense or matters a jot unless we have something that's mineable. And so that's really what the focus was last year and will be again this year.
Okay, well, why don't we go ahead and talk about that? I looked through the sections on the PowerPoint, and kudos to you for putting the drill results and putting not just one cartoon but a series of sections to give us an idea. And on the plus side, I see along the side of the pit, I see that zone there very politely lying across the side of a potential pit, and it seems consistent from section to section on the good. On the other hand, kind of mixed results, and I'm seeing highlights. I don't see the whole all drill results, so I'm not sure what the average works out to. So how is it going? What is let me invite you to make a forward-looking statement here. I mean, can you characterize, because you're looking for a resource coming up this year, right? So
we are indeed. Yeah.
How is the drilling delivering on your goals for that resource? And what can you tell us about the average grade, not just the highlight?
Okay, so I'm let me answer it a slightly different way. So what we did when we approached Shasta was we took all that historical information. I mentioned that 48% of the core was assayed, so 52% wasn't. Okay, so we had a toehold and understanding. We passed that over to Moose Mountain Technical Services, who are our independent resource engineering, resource modeling group. And so we've almost reverse engineered what we would need to do in terms of drilling to validate, test known extensions around where we saw some of the opportunities, and hand that information back to Moose Mountain in order that we can produce a resource. So I'm not going to talk about the tonnage and the grade. I think that's premature, because we're still publishing actually the drill results, and that's something you may have gone into with some of your other interviewees, is the fact that the labs were horribly delayed. We also had the fortunate problem of over-limit gold and silver assays, which further delayed things. But our results that we've been publishing are still preliminary. They're not finalized. We haven't completed our internal QA/QC. We do expect that to happen and be completed within the next few weeks. We will have published all the preliminary results that we, from the 51 holes that we drilled last year by the middle to late April. And so at that point there, we do, as you've started to do, we invite everyone to look at the slide deck, look at the cross sections of the series, and start joining the dots. But let me talk about a couple of positives that we are seeing. Where you say mixed results, I see high-grade pods associated with the structural controls, which was known from historical. But I see that halo-style mineralization, which is what we hope to see. But also I see the conceptual mineralized target areas getting extended. And as of right now, well, we walked into the season thinking we were testing 60% of the obvious mineralized footprint at Shasta. And we've walked out of the season thinking, heck, we've actually tested around 30% of it. It's open in all directions, possibly not quite so obviously to the west, because it might go deeper and you'd need more grade, but it certainly is still open at depth. And so we're looking at everything we're seeing from what we managed to drill. It's 30% of the obvious target, in our opinion. And what we're seeing, instead of two structural conduits associated with high-grade pods, we're seeing a much more diffuse, disseminated, and continuous mineralized ore body or potential, certainly a target zone that's almost got the characteristics more of like a porphyry style deposit rather than low sulfidation epithermal. Without wanting to get too technical, the way we think about it is they thought traditionally it was two sausages of high-grade mineralization joining at a point. It looks like a squash Christmas pudding. And for those people who don't know what Christmas pudding is, I heartily encourage you to buy one and squash it first, taste it, enjoy it. That's what our deposit looks like at Shasta.
All right. Well, I got a couple questions, but since you bring it up, what is the mineralization that we're looking at here? This is not an oxide heap leach project, I presume. Is it free milling? Is it grind and float? It's not refractory, I hope, or what are we looking at?
Okay, so they produce doré on site historically. Okay, so our understanding is that there are very, very low to no nasties. So this is not refractory. This is typically quartz carbonate hosted. It's multi-phase. There were lots of different events that have happened here, which is one of the reasons why we actually drilled oriented core. We want to understand not only where the veins are going and the stockwork, but we also want to understand which of the phases carries the mineralization we're targeting. Okay.
Yeah. Sorry, you're jumping ahead on something else I was going to ask. If the idea is the bulk halo, why spend the money on oriented core? It's a bulk target. You could even do RC just to know where it goes. But I hear what you're saying.
Because you want to understand which of the phases carried the payable metal, and if you are going to expand in any particular direction, you want to target that. Again, as I come back to, this is not a vanity project. Everything we've drilled at Shasta is mineralized, but not all of it will be economic. Certainly not at these metal prices. And we're really into trying to drive this to a production decision. And so what we've been doing is we've been analyzing that oriented core, and now in parallel with obviously producing the results. We've also run some preliminary metallurgical sampling and analysis, and those results will be coming out soon. I'm not going to jump the gun on that, but don't expect any surprises. They knew what they were doing historically. Okay, what we've done that's different is rather than running higher grade material through metallurgical analysis, we've run some medium and lower grade material. Okay, and so to answer your question, there is a component of it that could be gravity separated, but it really will be grinding, flotation, cyanidation, and that is the way that they did things historically. And it worked. Our records indicate that when the mill shut down in 2012, the Shasta ore going through there, the combined recoveries were in the 90s, the low 90s. Okay, so one of the things we'd like to do this year is get out and drill the wet tailings. It's a small wet tailings that's located near the mill. By our calculation, around 300,000 tons. Given the head grades of the material and the cutoff grades that went through there, so the original ore that went into the tailings was from Baker. The head grade there was around 30 grams a ton with a 12-gram ton cutoff. At Shasta, it ran at around 8 to 10 grams with a 2 to 4 gram a ton cutoff. And so, it's not rocket science to think about in terms of recoveries, what might still be located in that tailings. But equally importantly, if we're going to move over to dry stack tailings, we want to know what's in there. Okay, how are we going to handle that when we concentrate, and dry stack tailings? What would we be stacking? And so there's a journey here, and I think this is one of the messages I'm trying to get across is that it is about exploration. It's not discovery style exploration. It is sort of brownfield. We call it advanced exploration. We kind of know where we're going and why, but it's also about adding that incremental knowledge towards that production decision. That's where we're going with Shasta.
Okay, and not to beat the metallurgy to death, but is it an assumption or is there knowledge that the lower grade, halo mineralization has the same or similar metallurgy to the higher grade, structurally controlled material that was processed before? Because that isn't always the case.
It isn't always the case, and again, one of the more advanced studies we'll be doing this year is then zeroing in on the different phases of mineralization, because again, it's not just about which ones carry the metal, it's about which ones are recoverable. And so, but from our initial studies, wait for the news release. I think I'll have it out in a couple of weeks. Don't expect any surprises.
Okay, all right. One more thing then before we move on from the mineralization there, and that would be, I'm looking again at the sections. And you've got this you've got this green unit that's kind of barren. You've got this pink, or salmon, whatever you call it, where most of it is, but it's not throughout the unit, and it's not just high grade. It's like some of it is mineralized, some of it isn't. Do you know? Is that different pulses, or do you know why that is? Do you know what's really controlling this? Or
Yes, certainly in that main area that we drilled last year, we know more about the structural control. We certainly know about the Shasta fault as the structural control. Over on the other side, the JM structure is something that, again, the oriented core is starting to shed more light on for us. Okay, so we're learning about that. But again, as I've mentioned, you've had multi-phase events here that have controlled the mineralization, and so what you've got then is this. You've got a bit of everything, and so we've now got to pick through that and understand that. And but also then, as you move to the south at Shasta, they did drill historically, and again they had mixed kind of results. They had these sort of 2, 4, 6 meters of 1, 2, 5 to 7 gram kind of intercepts, but nothing that they could ever see the continuity sufficient to want to go and mine there. That's our interpretation. What we did in the last season was we stepped out 700 meters to where we thought that there was something that was interesting, called the Cayley Rainier zone. So 700 meter step out from the extent of the small scale open pit on the JM side, and our understanding was that the JM structure and the controls that came from that northern part effectively horsetail as they go to the south, potentially with some laddering, and as a result of that, it could explain why they didn't get the continuity of mineralization that they saw further up to the south, where the controlling structures were simpler. And so what we wanted to do was get in there. We've modeled it in 3 dimensions. Moose Mountain have helped us with that. And so we wanted to ask ourselves a couple of questions. If we step that far south, and if we do accept that the structural controls are more complicated, could there be pods of higher grade mineralization because of the complexity of the structural controls, constraining the fluids? And so what we did was we drilled the same orientation that they did historically, 700 meters in the south, and we got similar intercepts, 1, 2, 4 meters of 1, 2, 6 grams, interesting, but nothing that you would think about mining. But then we changed the orientation from east-west to 240 degrees based on our understanding of how the geometry may change. And we hit 16 meters of 17.5 gram gold equivalent, including 1.5 meters of 50 gram gold and just under 5 kilos of silver. Okay, so what that tells us is that it's more complex down there, but there's still the potential. Shasta still has mineralization 700 meters to the south. We also did ground mag survey, and we can see that the higher grade that they were targeting historically, and certainly where they drilled and the focus of their drilling was associated with the mag low that runs right the way through Shasta and continues to the south. And we own that ground as well, or we have the claims on that ground as well. So what I'm trying to say is that Shasta is not straightforward. Certainly the northern area looks to be the most straightforward, which is why we started there. We have a lot of work still to do, but we still see a lot of potential. Certainly with that bonanza grade down in the south, there are at least 6 other outlying zones of known mineralization from historical drilling that look to us like they have the potential to be followed up upon, but you've got to do it systematically. So we want to be very surgical at Shasta this season and see if we can't start joining up between that 700 meters to the south back up to the main zone where we drilled last year, and then also testing some of those outlying areas. So it's really exciting. I'm not saying for one moment that this is going to be a world-class deposit. I don't believe it has the footprint, but I think Shasta has some surprises still to show us.
Well, profitable and world-class are not necessarily the same thing. So I appreciate your candid.
Amen.
Your candid. Have you thought about hiring Goldspot or one of these AI guys to come in? I mean, if it's that complicated, maybe throw 1 million years of computer thinking at it.
You know what? The answer is yes. I think when you're at our stage of market capitalization, where you're trying to balance progress in terms of getting dollars into the ground versus dilution, where you're trying to monitor net asset value per share, and that's one of my key performance indicators. Again, the board's given me this year, NAV per share. On that basis, you're always trying to strike that balance. And so I think it's probably premature. I don't think we quite have the data set that we want. Certainly, we see more scope for more, grassroots work at Shasta as well. Certainly on those outlying areas and where there's potential for parallel structures. So, things like mapping, trenching, IP, potentially some VLS, more geophysics. Get in there and really understand what we've got. What we wanted to achieve in this 2021 and also in this season is to get runs on the board, get a resource on the board, and move towards something that looks to us to be eminently mineable. And I think that is the right way to go, and that is how you build net asset value per share.
That actually makes sense to me. I'm kind of old school. I think it all starts with boot leather. So I like to hear that. Can you quantify or qualify for us a little bit what percentage of your exploration drilling this year will go into stepping out or expanding what you know versus poking holes on more exploratory targets?
Okay, so the priority this year is to infill that space between the Bonanza grade hit down 700 meters to the south, back up to where we've been. We put the majority of the holes last year, where we're starting to build what we're hopeful will be a decent resource and something we can build upon even further. So, somewhere between 3,000 to 5,000 meters of kind of infill drilling. You can call it exploration because we're following up on sniffs of things that happened historically, but were never properly fully understood and certainly never mined. Okay, so that, and then, potentially another 3,000 to 4,000 meters stepping out to understand the outlying areas. So that's all at Shasta. And then we do have a couple of other projects.
Yeah, let's go there. Go ahead and tell us about, I guess,
sure.
Baker and then whatever you want to bring up.
For sure. So, Baker is a large alteration footprint. It's around 10 square kilometers. Compare that with Shasta at 1.5 square kilometers. Baker itself has had a lot more historical drilling, just like 30,000 meters, but only 15% of it was assayed, 15%. They knew what they were looking for. They would hit the controlling structure, and then they knew to assay immediately after it, in the footwall, and that's where they would find the pay zone. And as I mentioned, they operated at a 30 gram a ton head grade. But their problem at Baker was continuity. They would lose the vein. They'd find it again. They try and go underground. I mean, honestly, hats off to them in terms of ingenuity. But it was one of the reasons why they stopped mining Baker and moved over to Shasta. Shasta had that much more, much easier, lower grade, but compared to Baker, but much more continuity potential. And they were right. Okay, so Baker, huge. It's all bleached rock. No vegetation. The MDRU has done research at Baker. Believes that if there is going to be a shallow porphyry in that area, it's going to be under Baker. No one's ever found the pay zone. There's sniffs of it everywhere, but no one's ever found the pay zone. That is a big company opportunity, and we're not big enough as a company to do that. So what we are going to do, if we're going to be surgical at Shasta, we're going to be systematic at Baker. And so this year, Baker will be boots on the ground. It'll be getting out there, doing all the things that fill in the gaps from all the information that we've managed to gather from the 30 years plus of exploration that's taken place there. We'll be plugging the gaps and asking ourselves the question, if you're going to start somewhere, if you're going to go drilling and you're going to go looking for that shallow porphyry that could be as shallow as 500 meters, where would you start and why? And we think we know, but let's get Chris Dale out there and the team. This is what he's built his career on doing. Let him have some time, and then let's see where we get to. So I would think, drilling at Baker in 2023 is a little bit of a wish right now, a twinkle in our eye. We do need to drill 1,000 meters at our Oxide Peak property. That's contiguous with Baker to the north. That would complete as part of our earning to 60% on that property, which was the first deal we ever signed. Okay, so we do want to complete that. That would be helicopter access drilling. And so obviously more expensive. But again, still, being able to leverage the infrastructure we've got in place should keep the costs down and enable us to get as much exploration into that $1 million we still got to spend up there as possible. And then we have a third mining lease called METS. This was owned by
Sorry, before we move on from Oxide Peak, is it well named or what's the target there?
So there are multiple targets from grassroots work that's been undertaken. We did in 2020 undertake some IP up at a target called Oxide Creek. We're after market close, I think, today, so I can say that we do have a news release coming out on it tomorrow. We've got 2 targets that we want to follow up on this year. The first one is Oxide Creek. It's a porphyry target. I think we'll look to put in 2 to 3 holes there, and then we still have some information that we're still processing related to the target that we drilled adjacent to Baker last year called Dryborough. And so we'll be publishing the results of that tomorrow, and we do have some information there that we want to do some more grassroots work before we go back and poke any more holes in there.
Okay.
And so
just real quick. I mean, it looks like you've got fairly low-hanging fruit there at Shasta.
Yes.
Why complete this earn-in? You've got other projects. I mean, it doesn't sound like you've got something that you're just dying to drill up there. You're kind of poking around. Is it really? Is it worth continuing?
Yes, it is worth continuing. We're way over 60% of the way through to earning to 60%. And, we know that there are opportunities on Oxide Peak. What it needs is a systematic approach. And again, though, if you look at our slide deck, you can see where it is in the priority list, but it's worth us getting to that 60%. And then we may, in all things equal, we can hit the pause button. Or alternatively, if we like what we see, maybe this is something that we could bring someone in to partner on. If there's a bigger opportunity. And likewise, our bot property, which is even further to the northwest. This is, over 8,000 hectares. There's some nice geological anomalies on it. We want to go boots on the ground this year, identify some targets. And again, this is something potentially that we could partner with someone on. I happen to know, and you're probably aware of this as well, that, there's corporate investors out there that want to see you not just focused on one thing. They want to see enough opportunities of different scales to be tantalized and excited enough to want to get involved in your story. And so I think it's too soon in our journey, 16 months in from listing, to want to discount anything or put anything to one side. That's not the business I think we're in right now. And then finally, if I can, just briefly mention our Metz mining lease. It was owned by Skeena in 2009. Ron Nedlitsky, who I'm sure you've heard of, instrumental behind Snip and SK Creek and the resurgence of Skeena, along with the Skeena team there. He did fabulous work on the Metz mining lease property back in the 80s. We've managed to get all of that information, and we've just over 8,500 meters of drilling, of which we've managed to recompile 7,900. It's an exciting prospect. It's small, but you talk low-hanging fruit. We would love to get up there and put some.
Since you bring it up, let me put my finger in the wound there. Since you opened it, I mean, there's sections, and you look at it, and there is this pretty consistent blob, but it looks like there's low grade to this side, there's low grade. I mean, it looks like it is defined. So, what's the upside there? Is it a VMS? Are there going to be 3 more like it down the valley, or what?
I don't think you're thinking through it through the right lens. Basically, think about it in terms of discovery cost per mineable ounce. And that's the business I'm in. All right. And so think of it in terms of how it might work with Shasta, for example. I have a mill. If Shasta's coming in of a certain grade and there is some higher grade, a small pod, road connected up at Metz, is there a blending opportunity there? And what would that do to the overall grade? And what would that do to the overall economics of an opportunity to go into, rapidly back into production?
So how far would it be to truck?
23 kilometers.
Okay, it's not that bad. Right.
It's not that bad. We say this, and I know this is glib, but if Shasta was in Australia, it would have already been mined.
Okay, so I understand that for the business of mining, what works is one question. But as an evil scum of the earth newsletter writer, it's my job to look for hockey stick share prices before they happen, right? And so the question isn't just what works for mining, it's what's going to get the market to sit up and pay attention. And do you consider that there might be a risk? I mean, your geological potential target ranges from less than 1 million ounces to maybe a bit more. What if you define 750,000 ounces there at Shasta at good grades for open pit minings with good metallurgy? It could be a good project, but it doesn't have that million plus with multi-million ounce potential that really gets everybody to pay attention? Is there a danger that if you come up with a good resource that doesn't cross that million ounce plus line, that people peg it as, oh, it's small, bulk grade, who cares?
Well, firstly, I think that would be a mistake because, as I've mentioned, if this was in Australia, it would have already been mined. The reason that there are several Australian companies coming over to North America and buying our projects and our companies is because they've been doing something for a while now called cash flowing. So the first thing, I wouldn't be so quick to discount Shasta, even if it were in the range of the kind of numbers that you've alluded to. However, what I would say and remind people is think about in terms of the footprint that we will have drilled to get to that. 30% of the overall project, Shasta is a work in progress. There are parallel structures. We've got bonanza grade 700 meters to the south. Let's see what we can do this year now that we've put some money in the treasury. But then also don't be so quick to discount the opportunity that we see at Baker and that we see at Oxide Peak and that we see at Bott and that we see at Metz. Okay, because what I think what's really important is that rather than continually being a company coming back to the market saying, okay, this one didn't work over here, but don't worry, I've got another one here. Just give me some more money and I'll get you that hockey stick. But along the way, it's been doing this so that when you get the hockey stick, all I do is get you back up to where you were originally. That's not the business we're in. I'm trying to create sustained value here and give us a sustainable competitive advantage in terms of just being able to continue to operate, to be able to garner the kind of dollars and support from institutional investors and other investor classes that mean that we can keep going here and that we can unlock the potential of these properties in a systematic way. And so I don't think people should discount. Look at Gold Mountain. Okay, as an example. I don't know if you've been following that, but what a fabulous job those guys have done. Not everyone can walk next to a mine, start sticking some holes in, and come up with another Oxide Creek. That's a unicorn. Okay, and so there has to be a middle ground here. There has to be something in between that can work. And I'm trying to create a business that will operate at $1,500 gold as easily as it will operate at $2,500 gold. How lovely would that be? Okay, and everything in between. So how do you do that? How do you get to that point of sustainability? And I suggest it's that blend. It's that blend of having something that, for want of a better phrase, an anchor property, an anchor project that you can really get into and really start to make work. And from that, use that as the springboard to think about your other ideas and maybe attract, obviously, who wouldn't want a major to come and dance with them? Who wouldn't want? But there are a lot of other companies out there that don't fall into that category. Maybe they're development, maybe they're a junior producer looking to get to intermediate producer. All of these kind of opportunities, I think, are valid and should be looked at. And you have to ask yourself, what is it that they would want to see? What are the hallmarks? I think they want to see a well-run company with anchor projects and a game plan. A game plan that doesn't mean that we keep coming back with a begging bowl. And I think that is something
I get it.
I'm keen.
And I certainly, it was just the earning at Oxide that made me ask that. I'm not telling you should divest your projects. And clearly, if you have some success that gets some market recognition at Shasta, well, then your risk for poking a hole in Baker, if you have your best targets, you poke a hole or two and you come up dry, there's very little risk to the story at that point if you're already perceived as having a bird in the hand over here at Shasta. So it changes everything if that goes according to plan. I get that. On the other hand, Mr. Market can just be, again, you and I know what works for the business of mining, and that doesn't always get respect in the market. You can say, oh, well, he'd be wrong then. But whether he's wrong or right, it doesn't help with the share price. So let's just focus on the deliverables then. For this year, it really is Shasta, and then preparing the ground, a little bit at Oxide Peak, but it's mostly preparing the ground for the others and focusing on Shasta. So we've got...
Correct.
You're done with the drilling. We're waiting for the rest of the assays. We're waiting for metallurgy. And then still by June, do you think that resource comes out, or is it delayed, or what's next on the deliverables?
I'm shooting for May, but all things equal, think about June, and then we go from there. Okay.
And sort of, you have money, so are you already planning your drilling for this year? Is that done, or is it, well, let's see what the resource does, and if we raise more money, we can expand the program, or what do you plan to do with this season?
Yeah, so there are some building block foundational things that happen irrespective of the resource. Okay, so that infill area needs to be drilled. You know, between the Bonanza Grade to the south and where we focused the drilling in the northern half last year. Okay, so that has to be done regardless of what the resource is, because it comes down to discovery cost per minable ounce. Okay, right. But then absolutely, you're right. If depending on the resource, we do have some flexibility built into the proposed program. The proposed program is around $8 million into the ground. We don't forget that we are operating in a permitted mine area, which has its benefits, but also its additional costs in terms of compliance, environmental monitoring, etc. The camp that we put in place is a state-of-the-art 50-person camp to enable us to drill all year round. It's not our plan right now, but that was a significant investment for us, but also showed the local communities that helped us put it together and rebuild the camp and clean up the old camp, that we're sincere and we're serious, and that we want to work in partnership and, obviously, and act as stewards of the ground where we're privileged to explore. So an $8 million program. Within that, obviously, the priority is drilling, more oriented core. Okay, I had that call this morning, along the lines you were saying, well, hang on a second, if we're just testing ideas right now, what about RC drilling? Yeah, there's the potential for that, but I think our technical team really feels that there's more to understand at Shasta, and which can help us focus and target future exploration. So it will pay back in dividends in terms of not wasting drill holes where we don't need to.
If you're connecting the dots with that more complicated area to the south, then oriented core makes perfect sense to me. If you're drilling off a known bulk tonnage area, that's where I would see RC starting.
Agreed. Exactly. We're not at that point yet. We're not at that point yet.
So you just raised some money, but I don't know what obligations you might have had of your $8,000 base budget. Do you have all of that in the bank, or do you need more?
Okay, so it wasn't $8,000; it was $8 million. Okay. However. Yes, we do, is the short answer. We did a significant portion of the $9.75 million that we just raised was flow through. And as your audience is no doubt aware, those have to be used in a certain way, eligible, flow through eligible expenditures. And so that is the bulk of the money and the bulk of the budget. So we are funded for that work. But like all companies out there that are not cash flowing, we'll stretch those dollars as far as we can, get as much as we can done for that. But obviously, if we find something really exciting and we want to follow up on it, we've got some tactical dollars that we can bring to bear. There's a bit of contingency built into it, but we'll have to come back to the market.
All right, and as you say, not cash flowing, but you've got a 200-ton-a-day mill sitting there. If you did find something really exciting, is there any thought to doing a bulk sample that might help offset your exploration costs, or not? Or
yeah, you're talking about Plan E there. Plan A. Okay, so no, we in 2020 we brought Tetra Tech, the engineering firm, up to look at the mill. Not just because of the potential liability, but also the potential opportunity. And the good news is the mill's in pretty good shape. To restart the mill at the current capacity of 200 tons a day would be around 2 million Canadian dollars. So not exorbitant, but I think therefore you can answer the question yourself as to what kind of grade, what kind of tonnage would you have to put through that to try and make that somehow worthwhile, potentially blending it with the wet tailings, etc. To double its capacity and add in dry stack tailings would be about 6 or 7 million Canadian. That's the estimate we've got. So again, these are not bank-breaking amounts of money, but for a company that's focused on exploration, that would be quite an investment for us to make at this point. It's too early to say, but it's Plan E. It's on the radar, and we'd like to think of ourselves as agile enough that if that opportunity presented it, we'd certainly look into it.
I'm actually, it's kind of a bit of a trick question. I hate it when people rush into production, too early or before you've got the tonnage really well defined. If you start a mill it gets hungry. It needs
Oh,
feeding,
yeah.
and it can just eat your exploration budget. So I like to hear that it's Plan E, not B or A. Yeah.
No, don't ask me what plans A to D are.
All right. No, I got it.
Look 'em
No,
up.
that's good. I'm all right. No, that was a good answer. I'm glad that it's potential and not like the plan. Oh yeah, we're gonna have cash flow soon. All right.
We're not small scale miners.
I got it.
That is not the game plan here, and I also don't believe that's what the local communities. Not my understanding of what the local communities would prefer to see. There was this history in the Toodoggone of small scale production. There was a fair amount of vandalism and mess left from previous work. I think they want to see a respectful, progressive approach. And Christy Smith, who is our VP Sustainability, I just want to put out a quick shout out to Christy, who's just been, has been awarded the Trailblazer Award for Canadian mining. Women in Canadian mining should be awarded that at PDAC, and she's just become a published author herself. Her book, Weaving Two Worlds, is about working in partnership, allyship, actually a level above partnership with local communities to make sure that we're putting their thoughts and interests at the forefront of everything we're doing, alongside all of the technical and other, financial work that we're doing. So an exciting time to be working in BC. I genuinely and sincerely mean that. We're at the forefront of UNDRIP and its implementation. It's the right thing to do. And to be able to work with someone of Christy's caliber is just amazing.
All right. Well, shout out to Christy. Congratulations, and carry on. All right. Okay. I get it. And all right, we've got the money. We know what the deliverables are. We know what the variables are. I think I have a pretty good feel for the story and what to look for in the news flow. So thank you for that. And I always ask everybody, I like to wrap up these interviews with the skin in the game question. If I'm a potential shareholder, I guess I am because I'm not a shareholder right now, and you want me to put my money into this, how much of your own money have you put into this, Fletcher?
So currently I own around 1.4% of the company. You can read all my SETI filings. Two things. There's been no free shares in this company. Okay, every share has been bought with real money. And my average cost base, your audience can probably calculate it quicker than I can. I'm going to say it's probably around 26 to 28 cents on 96 million shares. So I'm around 1.3 million of that. So you can run the math yourself. So I've got, the money I've put in is around 300,000 of my own dollars.
All right, very well. That's. I like to hear that people paid for their shares instead of just getting, penny shares at the founding level and so on.
No, the cheapest shares in this company, other than the CPC that we reverse into as our listing. So, the cheapest shares in the parent company is 15 cents. Okay, 1.15. And the CPC, some of the seed shareholders in that, I believe, got the equivalent of 10-cent shares. But that was a relatively small amount. You can read about it in all of our filings. And so, like I said, and none of the people involved in our company got any of those seed shares in the CPC. It was a total arm's length transaction. Okay, so 15 cents. And I participated in the December placement at 50 cents.
Awesome. Okay, well, we've got the overview, and you've been a good sport with some fairly tough questions here. So I'll let you have the last word. Any last thing I haven't asked about that you'd like our audience to know?
Absolutely. Look, I think this last year was an exciting year. It was about establishing our operating footprint within an exciting area. Okay, and this area doesn't just have the potential for us to make, progress our own projects, our neighbors as well. If you start to add the potential of this area, this road-connected area with this heritage of high, production at high grade, if you start to add things together, you're starting to see the emergence, we believe, of a world-class camp. And so, we put it out there. Where else could someone go acquire 5 million ounce plus, assuming we all succeed, for less than $500 million? I don't think there's very many places in a safe jurisdiction with established operators or explorers where you could go and get that kind of traction. And so this year for us is all about consolidating that operating footprint and really advancing Shasta through to that production decision. So, last year was exciting. This year, it's all about milestones, protecting net asset value per share, creating value for our shareholders, and doing that in a surgical and systematic way. And I put it out to your audience, when you're looking at your sport for choice as to what you want to go and buy. Yes, discovery is exciting, but I think brownfield exploration is really the place to go. And you've heard it said before, best place to find a mine is next door to a mine. No, best place to find a mine is a mine that wasn't fully mined.
Okay, very well. All right, Fletcher, well, good luck and keep us posted on your progress.
I'd be happy to. Thank you very much for your time today.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.